Hi, it's Charles Kelly, Money Tips. I hope you're having a great day today. My name is Charles Kelly. I'm a former financial advisor for 25 years and the author of 2 books on money, Yes, Money Can Buy You Happiness and Borrow and Grow Rich. I want to talk to you today about house prices in the UK. Despite one of the worst recessions in our history, house prices are still going up, despite higher interest rates, higher fuel bills, etc. Prices are still on the move upwards. Now, this is because there's a shortage of certain types of properties, i.e. larger family homes. We've had this race for space out of the city in the last couple of years, and this has forced a higher demand. I'm talking to agents now, they can't get enough of the larger homes in the suburban areas, but flats are not faring so well. Flats are lying on the market for longer. There's price reductions coming up all the time on flats I see. 30,000 off, 50,000 off to shift these flats. So they're not so good. In fact, the Halifax said that since the lockdown, house prices on average went up by 21%, and in some areas it went up a lot more than that. But flats only went up on average across the board by 11%. So that speaks for itself. Halifax is the biggest lender in the country. So their figures do matter. This is based on their own figures and from their own lender. Now, how long can this continue? Well, I don't know. I see that with higher interest rates, the affordability levels will go down because people cannot borrow so much if rates are higher, and even if you wanted to, the lender will say, hold on a second, this doesn't meet the affordability criteria. If mortgage rates will double in price in terms of your monthly payment or go up substantially, they cannot just keep lending out the money that they were when interest rates were very low. So that's one factor. The other thing is that they're going to have less money in their pockets after rip-roaring inflation is putting the price of everything sky high. So how can they afford to spend as much on the property? Similarly, first-time buyers who are renting will not be able to save as much. Some people's fuel bills have doubled. Their gas and electricity have doubled just this month, and that they're going to start feeling the pinch there. And I believe that they'll have less money to spend on a mortgage, and also less money to spend in the shops, which I think will drive us into another recession. But we'll have to see. I mean, they've got to control inflation, but it could mean a lot of pain for people and possibly push us into another recession. I still think we're in economic winter myself, but we shall have to see how things develop. Now, this month also we've had higher taxes for a lot of businesses and people, because the national insurance rates in the UK have gone up. However, for the less well paid, and this goes up to about 34,000, they will not pay as much in national insurance. Some will pay less national insurance because the threshold at which you start paying national insurance were raised to 12,500 in the last budget by Rishi Sunak a couple of weeks back. So not everyone is going to be affected, but businesses will soon be paying more taxes to employ people. So that I don't know if that will have an effect on employment. Now, the other thing I want to talk about is funeral plans, prepaid funeral plans. These are these plans where you pay for your funeral now, and whenever you die, they will guarantee to pay your funeral. And you see these nice ads on TV. Oh, pay for your funeral now. Don't leave it to your children. And people say, I've paid for my funeral plan with XYZ company. I'm now safe. But are they? Well, it's evidently not. The FSA, the Financial Conduct Authority, have had to step in and start, or they haven't regulated them yet, but they will be regulating them from the 29th of July. But in the meantime, firms are getting into trouble. One has gone bust, ironically named Safe Hands. Well, not very safe, is it? So they've gone broke, possibly through rising costs. Perhaps they've done their sums wrong. They've said, well, this funeral, we'll take £5,000 off somebody, but then the funerals are just going up and up and up, and maybe they've done their sums wrong. So they've gone broke. The FSA have come in like the cavalry. When the heroes shot everyone, the cavalry marches in when it's all too late, and that's what's happening here. They're now shutting the door after the horses bolted into the field, because there's that company that's gone into administration, and there are 6 more that haven't even applied for regulation. Some of them may be not able to get regulation. If they can't get regulation, they can't continue to sell plans. So it's quite serious for this business. Now, when I say they've gone into administration, what I mean is that it's a bit like Chapter 11 in America. The business is taken over by what we call an administrator, and that person then runs the company. And these are highly paid accountants, so they get their fees first. So if there's any left, some customers might get their money back, but they will then write off some of the debts. They will probably get out of paying leases on offices and shops and that sort of thing. And if there's anything left of the business, it might come back into life in the future, as many of them do. But basically, the business is more or less dead, if you like. So what's going to happen? Well, you need to contact the provider, and I'm putting a number up for contact numbers if you've got one of these safe hands funeral plans. You can also go on the FSA website, and I'm putting another link up for that to see if you can find out if your company is regulated or about to be regulated. I wouldn't take any more plans before the 29th of July because after that there'll be tighter regulation. They may cost a bit more, but at least you'll know you're safer. FSA regulation, by the way, doesn't guarantee anything. It just means that there's stricter financial controls. Now, the traditional way of paying for a funeral, apart from paying it in cash or giving money to your relatives to pay in cash, was by insurance. You took out an insurance policy, and that policy paid out on the insured's death, and then went to the beneficiaries who paid for the funeral. And I would personally feel a lot safer dealing with a company that's been around 100 years, like Legal & General, Sun Life. Many of these insurance companies have been around for more than 100 years, surviving world wars, recessions, depressions. They still come out on top. In fact, if you go into most city areas and look at the biggest building, they're usually owned by banks and insurance companies. So they know what they're doing. They've got actuaries there who are people that calculate risks, and they assess risk not just today. They assess risks decades ahead to make sure the company can meet its liabilities, and there's even that they have substantial reserves, so that if there is a war or some sort of disastrous event, that they will still be able to cover you. I mean, when was the last time you heard of a large insurance company that's been around decades going into administration or getting into trouble? It very rarely happens, like the banks, and they're very heavily regulated anyway. So that's what's happening there. I would personally go down the route of insurance, but obviously that may not be the case, may not be possible for everybody. You may have health issues which precludes you from getting an insurance policy. You may be too old, it might be too expensive, but do look into that with your financial advisor. Now, the cost of funerals are, they're very expensive in this country. And when I say the funeral, normally what we mean is the cost of providing the coffin, taking the body from the mortuary, getting it to the church or the cemetery, and then the burials and that sort of thing. That can cost easily over £5,000. I saw this 18 months ago, and I was helping a family with a funeral arrangement. Just that funeral alone was nearly £6,000, and that didn't include the burial plot, which had been pre-bought. But a burial plot can cost several £1,000s, up to maybe £15,000-20,000 for a fancy concrete tomb. So look at these prices. I mean, they're already going up because the cost of materials, the cost of timber, the cost of everything, fuel has gone up. So funeral costs are going up. So you work out with your advisor. Don't just take out one of these plans on the phone because you saw an advert for it. So have a look at that. I would stick to insurance policies. I'm putting all the information up on my blog. There'll be numbers to contact if you're affected by this. So do check that out. Now, as I said before, I think we are definitely in what's called an economic winter. I know that after the lockdown, the economies are recovering, but China has gone into a major lockdown. Millions of people are locked in their homes. They can't even get out. Some of them are starving in there. But at least when we had a lockdown here, it wasn't so bad. You could go out and exercise. You could go to the shops. You could make essential journeys. But largely the Western economies are supposed to be bouncing back. But then we've got inflation. Governments have printed, billions and trillions of dollars, and that's affected the cost of everything. Money is inflated. The prices are going up of everything. And your money has been devalued. So what's happening there is now that the governments, the central banks, are having to raise interest rates to put a cap on inflation, to curb it, to rein it in. So that will affect everything, because interest rates normally affects the stock market, normally affects the property market. I know interest rates are still low at the moment, but if they keep going up like they are now and inflation keeps going up, then we're all going to be in a bit of trouble. So do watch out for that. I think we're in what I would call an economic winter. My personal opinion, the way I see things, I think more businesses will go under. People will have less money in their pockets to spend. We're a consumer-driven society. As you've got less money to spend, that means that the businesses are making less money, and some of them may succumb to going out of business, but certainly may cut down on employees. So employment could go down. So do check that out. I think to get through this, I put up a lot of free training. I was a financial advisor for 25 years. I put up a lot of free training on my blogs and websites. So do check that out. Charles Kelly Money Tips on YouTube. moneytipsdaily.com is my own website. But do check that out. Now, what I'm offering at the moment to help people get through this winter period, I'm offering what I would call a wealth discovery accelerator call, which is a Zoom call with you and me to try and work out your strategy for your wealth development, for how you're going to not only get through the current crisis, but plan for the future. Because we can all work and work and work, but unless you've got some form of passive income, you can never ever retire or quit the rat race. So I'm offering this free wealth discovery accelerator call. I'm putting a link up here. We might see it there, wherever. So do have a look at that. Look at that link. And if you want to book, just click on the link and book a time with me to book in your call. So that's what I'm trying to do for people. But in general, do check out my material, because I do put a lot of free stuff here, and do like and subscribe, because that helps the algorithms decide whether this is getting through to people and whether this is helping people. So thanks very much for listening. Have a safe day wherever you are, and I will speak to you again very soon. Thanks very much. Bye for now.